Alright guys, so we're right in the middle of a series talking about the top Dividend Aristocrats, how all the Dividend Aristocrats have performed in the past, how they look now, and whether you should invest in them in the future. We talked previously about the top 5 high yield Dividend Aristocrats, and in this video I'm sharing with you 5 more to cover all 5 of the Consumer Discretionary Dividend Aristocrats. In this video I'm going to share with you what those 5 different Dividend Aristocrats are in this sector of the economy. We're going to look at their basic information. We're going to look back historically to see how they've performed over 2 different time periods, looking at just monthly contributions, both reinvested and not reinvested dividends, looking at a lump sum investment, and looking at a lump sum investment plus monthly contributions. And then after we've looked at how these different dividend stocks have performed historically in the past, we're going to look at their metrics right now to see if they are a good fit for our portfolio or not. Hopefully you find a ton of value in this video. You learn something new that adds to the value of your portfolio. So if you appreciate this video, hit that like button, hit that subscribe button, and let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. As a quick reminder to you guys, if you want more dividend content than you get on this channel, make sure to check out the link in the description below for my Patreon community, where you get access to all of the spreadsheets that I use both in Google Sheets as well as Microsoft Excel. You also get access to every single move I make in my own portfolio the same day that I do it, as well as just keeping track of my portfolio and seeing what I do and the strategies that I have. And you also have access to the monthly dividend stock spreadsheet with all of the dividend stocks that have been raising dividends for at least 5 consecutive years. If that sounds appealing to you, check out the link in the description below. You guys know I never want to waste your time, and I want to deliver massive value with every video I make, so let's jump right into the content. Alright guys, here's the spreadsheet. This should be familiar to you if you saw my previous video where we are slowly working our way through all of the Dividend Aristocrats. And for anybody who's new to dividends or new to this channel, a Dividend Aristocrat is a member of the S&P 500, and they have been paying consecutive and increasing dividends every single year for at least 25 years. There are also a few other nuanced rules that make them a Dividend Aristocrat, but they're not quite as important for you to understand. We previously covered these 5 companies right here: ExxonMobil, Chevron Corporation, IBM, People's United Financial, and Consolidated Edison. And in this video, we're expanding our spreadsheet from 5 to 11 because we're including one here due to a spreadsheet snafu. Altria Group was left off of the previous video, and so I'm going to add them in here. So we have 11 now. We're expanding from 5 to 11. We'll look at, in this spreadsheet here, the two different time periods. We've got right here, we've got a 33-year look back, 4 different investing strategies, and then an 11-year look back. So we've got August of 1988 through August of 2021. And then we also have January of 2010 through August of 2021. Again, the 4 different strategies here: not monthly contributions, not reinvesting the dividends, reinvesting those dividends with monthly contributions, a lump sum investment, not reinvesting anything at all, and then a lump sum investment combined with monthly contributions and reinvesting all dividends. You can see the inputs up here on the top: monthly contribution, which we can adjust; annual cost of living adjustment, where we are increasing our monthly contribution by this percentage every year; and then of course over here to the right, our lump sum investment. Here are the 6 new companies we're talking about. We've got Altria Group, ticker symbol MO. We've got Leggett & Platt Incorporated, LEG, Genuine Parts Company, GPC, McDonald's Corporation, MCD, Lowe's Companies, LOW, and the Target Corporation, TGT. As you can see here, their dividend streaks are all at least 25 years. We've got Altria at 49, Leggett & Platt at 50, Genuine Parts at 65 consecutive years, McDonald's at 46, Lowe's at 59, and Target at 54. You can see their yields here range from as high as 7.27% for Altria down to as low as 1.38% for Target. And for each of these years over here, I forgot to mention, we're looking at portfolio value as well as the trailing 12 months of dividends. When I say TTM dividends, I'm talking about the last year of the look back period, August of 2021. In both scenarios, how much did we receive in dividends from this investment over the past 12 months? And then we'll look at some charts here at the end. Let's start with looking at the 33-year look back period Monthly contributions, not reinvesting any dividends. I went ahead and sorted this here by portfolio value so we can see here just how crazy this is. Assuming $250 a month in monthly contributions and an annual cost of living adjustment of 2% increase every single year, you can see here top performers are Lowe's, Target, McDonald's, which are the top three, which are three new additions to this spreadsheet, followed by People's United, and then Genuine Parts, Leggett, and Platt. So total contributions here would be $250 a month for 33 years. $250 a month times 12 times 33 years means that we're contributing $99,000. We're not reinvesting dividends, so $99,000 in contributions leads to a minimum of $206 over this time period, but a high of $4.46 million for Lowe's, which is, I think, a little bit surprising for most people to see. If we sort by trailing 12 months of dividends for these investments, so we've got Lowe's here taking the top spot, which is a new addition. We've got McDonald's in third place with $23,000 in trailing 12 months of dividends. We've got Target right behind it at $19,000. And then we've got down here Leggett and Platt at $14,000 and $422,000. And then followed here in last place by Genuine Parts, $11,000 and $446. Let's move on here to reinvesting dividends, because I think this is what most people were more interested in. All right, top result here, Lowe's companies worth $6.16 million and trailing 12 months of dividends, $82,000. Then we've got Target at $2.94 million, McDonald's at $1.8 million, followed by People's United at $1.6 million. And if we sort by trailing 12 months of dividends, we've got top result here, Lowe's, followed by People's United, then Altria Group at $51,000, McDonald's at $38,000, Chevron at $34,000, and we've got Target and Leggett and Platt down here. Last place, Genuine Parts, $21,000. Let's move over here. Let's take a look at the lump sum investment, where we are taking $100,000, dropping it in there in August of 1988, and we're not investing any more money, and we're not reinvesting dividends. Shut the front door. Look at these numbers here, guys. Top result for Lowe's. I had to double check these numbers. Lowe's just went on a streak after August 1988, and we'll look at the charts here to see how that actually happened. But I mean, $100,000 invested in Lowe's in 1988 would lead to $31 million here in 2021, with trailing 12 months of dividends of $418,000. What this really speaks to, guys, is that at the time of the investment, 1988, you were able to buy a crap ton of shares of Lowe's, and as a result, the amount of dividends that are being thrown off there are so high now. And with the combination of an increased portfolio value as well as increasing dividends every single year, all of those shares that you purchased for like maybe $1, $2, $3 a share resulted in such a high amount of dividends being paid now. If we go over here to the spreadsheet, all of the tabs here for individual companies, you can see that the lump sum investment happened where you were able to buy Lowe's for 62 cents a share in August 31st or August of 1988. So that buying at 62 cents a share leads to 161,000 shares, which is why you have such a high dividend and portfolio value, because at the end of the period, instead of being worth 62 cents a share, we've got way down here at the bottom in 2021, it's worth $192 per share. That's why it's so crazy, and the dividends are being paid out at 80 cents a share. Second place here, $8.4 million for Target. McDonald's is worth $4.4 million. Leggett and Platt worth $1.5 million. And then Genuine Parts here is worth $821,000. Looking at the 5 new companies. Let's take a look at a lump sum investment plus monthly contributions here. All right, so now we've got Lowe's companies here in the top spot still. Instead of being worth $31 million, now they're worth $37. Also generating over $500,000 in dividends every single year. Then we've got in second place Target Corporation at $11.35 million. We've got McDonald's at $6.3. People's United at 2.89. Leggett and Platt and Genuine Parts bringing up the rear at 2.45 and 1.7. Let's pop over here to our spreadsheets for the 33-year look back to see how this looks on a chart. And I apologize, guys. It's hard to get enough colors here, but to see it all. But you can see that pretty much all of it's lumped together here, except for a few outperformers. This is Lowe's right here. And then the bronze is Target, and then I believe yellow is McDonald's, no, PBCT, which is People's United, and then we've got McDonald's right here in the, I don't know what color that is, like charcoal / bronze. Next up, and that was for monthly contributions, reinvesting dividends. If we're not reinvesting dividends, same idea here, kind of lumped together with that outperformer being Lowe's Corporation, just really took off from the others. And then in second place here, we've got Target. Looking at our lump sum investment, no monthly contributions. This is just investing at the very beginning of the period, no monthly contributions. Same kind of idea idea here where a lot of it's lumped together with most of these companies, with a few outperformers here. We've got Lowe's up here, and then Target and People's United and McDonald's. And then we've got lump sum plus monthly contributions, even more so magnifies just how well Lowe's performed during this time period. And really when you ultimately invested at the very beginning, all really close together, and then just blowing away the competition with Lowe's. All right, next up here, we're taking a look at our 11-year look back. This is from January 2010 through August of 2021. Starting off here, we're looking at not reinvesting dividends with monthly contributions. So top result here goes to Lowe's again. So it's interesting, in the previous video, we talked about how when we looked at the 33-year look back, the top performer by far was People's United Financial. But when we looked at the 11-year look back, we found the top performer was Consolidated Edison. In this case scenario here, Lowe's companies performed the best in both the 33-year look back as well as the 11-year look back. And that is with respect to portfolio value. Let's go ahead and sort by trailing 12 months of dividends. Top result here though, first Lowe's at 144, then Target at 141. And we've got quite a drop off where we dropped to 80 for McDonald's, 62,000 for Genuine Parts. Again, this is $250 a month invested for 11 years. So just to get an idea of what that would look like in as far as our own capital being invested, 250 times 12 times 11. Total of $33,000 invested. And we can see here the portfolio values. The only one that's worth less than what we invested in was ExxonMobil, only worth 30. Everything else was worth more than what we contributed. If we sort by trailing 12 months of dividends, the top performer here was Altria Group at $3,109 in trailing 12 months of dividends after that 11-year look back. And then we have quite a drop off here with Lowe's being in second place at $1,900, then Chevron at $1,800, and then quite a few lumped in the $1,700 and $1,600 range. So this is what we come to expect when we look at Altria. They are known for paying a large dividend yield every single year. I have my own, and I think many people share the concern about whether or not Altria can sustain a dividend yield when its primary revenue comes from tobacco, and given that more and more people are not smoking every single year. But that being said, that's not the point of this video to talk about Altria. It's just to share that, as we expected, they are the top performer when it comes to trailing 12 months of dividends so far with the 11 companies we're looking at. All right, next up here, we're looking at reinvesting dividends. So monthly contributions, reinvesting all dividends. With respect to portfolio value, now we have a #1 slot here with Target Corporation now outperforming Lowe's. And that's because I believe Target was paying more in dividends than Lowe's was. So they're worth 168 versus 165 for Lowe's. Then we have quite a drop off to 96 for McDonald's and Genuine Parts at 76,000. If we look at sorting by trailing 12 months of dividends, top performer here, Altria Group at 43.74 annually after that 11 years. Then we've got 22.92 and then 22.77 with Chevron and People's United. And then we've got Leggett & Platt, Lowe's, making up #4 and #5. We've got Genuine Parts way down here at 18.34 and Target at 17.13. Next up, we're going to look at our lump sum investment here, where we're taking $100,000 at the beginning of the period and then not doing any reinvesting of dividends and not making any monthly contributions. $100,000 invested, 11 years later, top result here is Lowe's companies at $890,000. And then far below that, it had $509,000. We've got Target, then we've got McDonald's. This is actually fascinating, guys. The 5 new companies from Consumer Discretionary, Lowe's, Target, McDonald's, Genuine Parts, Leggett & Platt, and then even Altria here are the top 6 spots with respect to this lump sum investment. In fact, we remember from the previous video, we've got People's United and ExxonMobil worth less than what we invested. If we sort by trailing 12 months of dividends, then we've got top result here for Altria Group at 17,000, Lowe's at 12,000, then we've got Leggett & Platt at 88, then we've got 85 and 82 for Genuine Parts and McDonald's. All right, lastly guys, let's take a look here at this lump sum investment with monthly contributions. All right, in this scenario here, if we sort by portfolio value, top result here goes to Lowe's at $1.05 million, followed by Target at 678, then McDonald's at 485, Genuine Parts at $412,840. So this is technically $100,000 plus monthly contributions of $33,000. So total invested $133,000, worth $127 for Exxon. Every other company here is worth more than the $133 that we put into it. 150, 159, 189, as high as $1.05 million for Lowe's companies. And then sorting by trailing 12 months of dividends in this scenario, we see top result goes to Altria Group at $21,000 in trailing 12 months of dividends after the 11th year, followed by Lowe's at 14, Leggett & Platt at 11, and then 10 for both Genuine Parts and McDonald's. All right, guys, let's take a look here at the different charts for this. 1, 2, 3, 4, here we go. Here's our monthly contributions, not reinvesting any dividends. 11-year look back here. So we've got red in the top spot, which I believe is Lowe's. Then we've got Target right here in like a light bronze or whatever color that is. And then third place here, we've got McDonald's. Fourth place right here is Genuine Parts. And then fifth place is Leggett & Platt. Then we've got the monthly contributions reinvesting dividends. We can see here that Lowe's loses its top spot in portfolio value. Second place behind Target. Then we've got McDonald's right here. Here's our lump sum investment without reinvesting any dividends or making any monthly contributions. We see here that Lowe's is really outperforming here, followed by the same companies here, Target, McDonald's, and Genuine Parts. And then down here further, our lump sum plus monthly contributions and reinvesting dividends. Same idea. Although Lowe's is outperforming here, it's not quite as outperforming as the other comparisons that we did above. So now that we've looked at how these Dividend Aristocrats have performed historically, both at different time frames and different investing strategies, let's take a look and see how they look as an investment right now. All right, guys, so here are the 6 companies. We've got 5 in the Consumer Discretionary, 1 in Consumer Staples, because I had that spreadsheet snafu with the previous video where Altria was left off because of their status as a Dividend Aristocrat. It was coding it as a dividend contender instead. So we're gonna look at the metrics that I look at when I evaluate dividend stocks here. Doesn't mean that my metrics are the best or that I am the best investor, because I'm certainly not the best investor out there. I have my own metrics that I think are great for evaluating dividend stocks that are similar to what other companies use as well when they look at, Simply Safe Dividends or other companies. They look at the same type of metrics that I look at when evaluating dividend stocks. All right, so looking at these 6 companies, we got dividend yield here for 7.29% for Altria, Genuine Parts at 2.54%, Leggett & Platt at 3.46%, Lowe's companies at 1.65%, McDonald's at 2.2%, and Target at 1.41%. Just right off the bat here, guys. I mean, from a yield perspective, if we're really looking at cash flow, I mean, we've got only 2 here, maybe 3 that are really meaningful yields. We've got Altria Group at 7.29%, and then we've got Leggett & Platt at 3.46%. Otherwise, these yields are just so low. We can see here their average 5-year dividend yields. We can see that Altria Group is yielding more than their 5-year average, whereas Genuine Parts is below their 5-year average. Leggett & Platt is below theirs as well, but not by a lot. We've got Lowe's right in line with what they've been yielding historically. And then we can see that McDonald's is lower because they have a higher valuation right now. And then same thing with Target, really high portfolio value, which has led to a lower yield. Here's our 1, 3, and 5-year dividend growth rates. I like to have a dividend growth rate that is beating inflation because I want to make sure that my dividend is growing and not being eaten up by annual adjustments in inflation. I do give a break here, for 1-year break here due to COVID, because a lot of companies didn't raise their dividend quite as much because there was so much uncertainty. So I give a little bit of a break here. But honestly, we've got some options here. Altria Group is raising by 8% historically. They were a little bit lower in the 1 year. We've got Genuine Parts raising every year by around 4.75%. A little bit lower here for Leggett & Platt. We've got Lowe's doing a great job of raising their dividend, almost by double digits every single year. And we've also got McDonald's raising their dividend by at least 7-8% every year. Target's a little bit lower on their yield, but it's still just about a bit higher than inflation. Scrolling over here to the right, we've got free cash flow per share. I like to utilize free cash flow per share because it's a great window into how well a company is performing and how much cash they have available to distribute to their shareholders. We've got the standard payout ratio here, which is dividends paid divided by net income. And then we have the payout ratio based on free cash flow, which is dividends paid divided by free cash flow, which I believe is a better measure for showing how sustainable a dividend is. We've got here all of them that pretty much meet my criteria. Altria Group is a little bit high at 79%. I like to see companies that are 75% or lower. All of these other ones here are really strong. McDonald's is at 72, but they've historically been around 72. We've got these here really low. Target at 23. We got 26 here for Lowe's. Leggett & Platt at 44, and then Genuine Parts at 23%. So we look at all of these different metrics here. I like how Lowe's and McDonald's are green across the board with respect to their payout ratio, their dividend growth rates here, but their yields are just so low right now. I mean, if you bought McDonald's during the COVID correction, when you got McDonald's for a yield of over 3% because their price was so low, congratulations. But honestly, when we look at McDonald's, it's tough to, make it a buy right now when their yield is so low. I like Altria Group here, although, I keep going back and forth with how sustainable Altria can be with their dividend in the future. I may end up buying Altria just because it's got such a long and sustainable dividend history. You've got some nice balance here with Leggett & Platt, although their 3-year growth rate is a little bit low. This one might not be bad. It actually used to be in my portfolio a while back, but when I consolidated and brought it down from like 35 holdings down to 20, this was one of the companies that I got rid of. Target's not a buy for me because their dividend growth rate is a little low. I'd expect it to be a lot higher given how low their yield is. So honestly, none of these are like slam dunk, gotta buy these companies, but if I had to be honest with you, the one that I'm probably looking at most closely to add to my portfolio, because I do want to add some more holdings, would probably be Altria Group. Remember, the historical performance we looked at was just that, historical performance, and they are not necessarily an indicator for future results. And if we're talking about cash flow and dividend stocks, we have to look at how companies' metrics are right now, not how they looked in 1988 or in 2010. Hopefully you found some value out of this video, guys. Make sure to leave your 2 cents in the comments below. Check out that link for the Patreon community if you want access to all of my spreadsheets and more dividend content than you get here on the channel. And just leave your 2 cents in the comments below to let me know what you thought of this video and what other videos you want to see as well. We will continue to build out the Dividend Aristocrats. We might make a specific spreadsheet just for Dividend Kings, and I'd love to do some individual matchups of companies that you guys want to learn more about. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.